Have you ever wanted to turn $100 into massive amounts of money? Well, apparently you can. So this investment could turn $100 per month into $500,000. So let's get into this story by The Motley Fool. So investing in the stock market can be intimidating, but it's one of the best ways to generate wealth over a lifetime. It's also easier than you may think to begin, and you don't need to be a stock market expert to choose the right investments. I agree. You also don't need a lot of money to get started. In fact, if you're able to invest just $100 per month, you could build a portfolio worth more than $500,000 as long as you have the right investments. Again, I agree. So choosing the best wealth building investment. So if you're new to the stock market or simply want to set it and forget it type of investment, one of your best options is the S&P 500 ETF. This fund contains all the stocks within the S&P 500 index itself, which are some of the largest and strongest stocks in the country. S&P 500 ETFs have several advantages. For one, they're very likely to survive market crashes. All investments will be subject to short-term volatility, but strong stocks have a better chance of surviving that turbulence and experiencing long-term growth. And I agree, right? This is the thing, right? We got to understand when it comes to investing, unless you have the time and the will to do the research and study companies and stocks and markets, you're not going to beat the S&P 500, period. End of story, right? Like 99 times out of 100, you will not beat the stock market, right? The S&P 500, you will not beat it, right? That's why it is typically always better for the common person who doesn't have all that time or energy to put into it to set it and forget it. Do things that will compound and basically double every 7 years, right? Because you could put in $100,000 in a compounding investment that will double every 7 years, and you will easily become a millionaire without really doing much, right? Without even realizing that you're going to become a millionaire, right? So that you could just focus on your main income producing source, which is your job, right? This is how you could get teachers who become millionaires, police officers who become millionaires, right? Construction workers that become millionaires, right? And typically, none of them make a large amount of money. So all you got to really think about when it comes to investing is like, okay, what has a proven track record of compounding at a certain interest rate over a long period of time that I could just consistently, and that's the key word, consistently putting more money into it every single month, basically like on autopilot. So the S&P 500 itself was established in 1959, and despite the numerous crashes it's seen since then, it's always recovered. It's also earned a 10% average annual rate of return since its inception, which is beating inflation. Keep that in mind. Some years it's earned explosive returns, while other years experienced losses. Over time, though, those returns have averaged out to around 10% per year. Another advantage of the S&P 500 ETF is that it's a fantastic long-term investment. This type of fund performs best when it has plenty of time to grow, ideally a few decades. If you leave it long enough, you can earn a substantial amount of money. So how much can you earn with an S&P 500 ETF? These investments may be relatively safe, but they can make you a lot of money too. Say, for example, you're investing in an S&P 500 ETF earning a 10% average annual return. So if you invest just $100 per month and leave your money alone for 40 years, which by the way, you could set it to reinvest your money automatically, you'd have approximately $531,000. Of course, not everyone has 40 years to wait, but the more you're able to save each month, the faster your money will grow. For instance, if you were to invest $250 per month for 30 years, you'd have found $493,000 saved, or invest $425 per month for 25 years, and you'd have around $502,000 accumulated, assuming you're still earning a 10% average annual return. Generating hundreds of thousands of dollars in the stock market takes time, but keep in mind that S&P 500 ETFs are hands-off investments. In other words, you can set your savings on autopilot and make money while you sleep. So how to get started? There are several S&P 500 ETFs to choose from, and many of them are similar, and all of these funds track the S&P 500 itself, so they all include the same stocks. Some funds, though, may charge higher fees than others. Some of the best S&P 500 ETFs include iShares Core S&P 500 ETF, or IVV, or SPDR S&P 500 ETF Trust, which is SPY, and Vanguard S&P 500 ETF VOO, or VOO. Regardless of which fund you choose, S&P 500 ETFs can be a fantastic addition to your portfolio. By investing consistently and staying invested for the long haul, you can build a portfolio worth hundreds of thousands of dollars or more. So should you invest $1,000 in Vanguard index funds or Vanguard S&P 500 ETF right now? Okay, yeah, that's just a pitch. But either way, see, that's the thing that you really got to understand. When it comes to investing, don't make it complicated, right? Like, there's no reason why anyone should ever make personal finance or investing complicated, because it's not, right? Personal finance is very simple. Investing is very simple, but it's hard to do, right? And so what we mean by that is that, okay, it's simple to understand that, like, okay, if you put $100 per month into an investment that you also set to have it reinvest all the dividends from into buying more shares, right? Because a lot of times you can do partial shares nowadays, which is pretty awesome. You know from data that after a certain point, you're going to have $500,000, $1 million or more, right? By simply consistently putting this amount of money per month into it. The funny thing is that it's actually hard to physically, consistently put money into an investment. So even though everything about finances are simple, it's still very hard to do. And I understand that. It's very hard to defeat your habits. It's very hard to change the way that you're thinking or to change what you end up doing in life, right? Like, but I want to go out this weekend, right? Oh, I want to go to the club. Oh, I want to spend my money on alcohol. Oh, I want to buy this and that. I want to buy the brand new iPhone, right? Oh, I want to, go on a trip this month, right? Which could eat up into your $100 budget. And I understand that. I understand all of that. The thing is, you got to really factor in what's important to you and whether or not you actually want to have money when you retire and you can no longer work, right? Because everyone's going to get to the point in their life where they basically cannot work. So you should hope that you have investments put in place to where you could actually provide for yourself, because you don't want to be in a nursing home in one of the worst areas imaginable with super bad care because you have to rely on the government assisted nursing home situation. Whereas if you have a lot of money in your accounts, right, you could be having in-home care, even though it's going to cost more. You could have in-home care. You could spend time with your family still. You're not going to be a burden on them financially, and you get to live the rest of your life, however long you may live, in a very financially stress-free way. Because you don't want to end up going out in life at the very end stressing about money. Like, no one wants to deal with that, right? So by simply doing something as simple as putting $100 per month into an S&P 500 like ETF, you could end up retiring with a lot of money, or just having a lot of money available to you. Right? So just keep that in mind. Don't make things complicated. But if you need help with mastering your money, meaning getting out of debt, creating an emergency fund, and starting to invest in a very simple manner that's easy to stick to, go check out 40inbox.com to learn the secret to mastering your money, and we'll see you in future episodes. But either way, you do not need to make things more complicated than they actually are. And we will see you in future episodes. If you like this sort of thing, make sure to hit the like button and stay tuned for more.